Alrighty, traders, good afternoon, good morning, good evening, and welcome to this beautiful Monday evening session as we go ahead and take a look at the opportunity based on what we're going to talk about today, which is going to be on the Pip Grabber trading strategy. Now, everyone knows about the Pip Grabber because it is a strategy that has been well spoken across the world. Everyone's talking about it because it's such a unique strategy, very easy, very simple to be able to trade. But the secret is not necessarily in the actual strategy itself. The secret is how we manage our risk. And so tonight we're going to spend some time talking about the Pip Grabber strategy, but we're going to focus on three things that traders need to know about the Pip Grabber trading strategy and how to be able to manage your risk around it. Now, I'm not going to be telling you exactly what you need to do. I'm just telling you how it should be traded, and you can decide how you want to trade it, which means traders, if you want to go ahead and blow your accounts up and trade it with high risk trading, that's up to you. But I'm absolutely certain that's not what you want to go ahead and do. So let me go ahead and share my screen, and then let's go ahead and talk about the trading opportunity and what it means to be able to manage your risk when trading this strategy. And so let's go ahead and get started. Now, firstly, number one, for those that don't know, the trading strategy, the Pip Grabber trading strategy, is a very simple strategy. And I'm going to go ahead and tell you what it is because it is that simple. Firstly, number one, you're going to get a trade signal on your ByDzyne app, right? When you are signed up as a student with Smart Market Academies, you are going to get the ByDzyne app. Now, when you get the ByDzyne app and you got your login details, you're going to log in there. And when you log in there, you are going to get trade signals coming from me. Now, those trade signals are going to be buy and sell signals based on a pip grabbing trading strategy that I've been following for a very, very long time. In fact, I want to go ahead and share with you how successful the strategy is so that you can feel confident, because I've done all the homework, or at least the hard work on this, and I've gone ahead and traded in live trading accounts so that we can bring the results to you and say, hey, listen here, these results aren't just me saying the results are good, all right? This is not just making stuff up, all right? Because you can't make up this stuff, right? I'm telling you what we're doing is actual trading opportunities that is working, trading strategy that is working. Take a look right here. In 2021, we have traded this strategy religiously, and we have captured over 14,000 pips. In fact, the real number right here, exact number, is 14,400 pips being generated. So we've done very well. In fact, this year alone, we're up on our live trading account almost 90% for the year. 90% for the year. That's insane. I know, but that's okay. It's okay to be insane a little bit and doing well. Now, this is it. We're now in the 11th month. So which means that we've already closed out for 10 months and we're making 90% profit in 10 months. That's like 9% a month. Now, I'm not going to say that the past results are going to be what we're going to receive in the future. So past results aren't predictive of what we're going to get in the future. But what I am saying is the strategy is really, really good and is doing really well. So every trader that trades this type of strategy and trades these signals that we've given out should have somewhat success in their trading. All right. If you apply the risk management rules proper, if you're going to over leverage on your trading, doesn't matter how good your strategy is, you're just not going to make money. All right. Because if you over leverage, you're going to get yourself into a lot of trouble. But more importantly, you're not going to be able to follow the trading strategy religiously, like it has to be done. In order for it to be successful, you have to be consistent. All right. And so to be consistent, or at least to be profitable, you have to be consistent. So it's very important. That's why we bring in this conversation up today, because I think it's vitally important that traders, old or new, need to understand this. All right. Because you have to apply these rules proper in order to get the results that you're looking for. Now, let's start off first in number one. What is the strategy? With a high level, giving you a high level view of what the strategy is, it's basically getting signals from the ByDzyne app, which is coming directly from me, telling you to either buy or sell a certain currency pair, whether it be New Zealand CAD, US dollar CAD, Aussie CAD, Canadian Swiss, Euro, US dollar. Those are the 5 currency pairs we pay attention to, but the signal is either going to tell you either to buy or to go ahead and sell. Now, when you get a signal and the signal says New Zealand, Canadian, sell, and it's going to tell you exactly the price because that signal is coming directly from my trading account. So it's telling you directly from my trading account what you should be doing, whether you're buying or selling that particular currency pair, and at what price did we go ahead and sell. Again, this is a live trading account that's sending you a signal saying, hey, this signal is telling you the exact price that I am entering in on that trade. All right, so I'm not trying to make things up. I'm telling you exactly the way it is. All right, so it's exactly the price that we're getting in, which means this. If I go to the account right here, let's go to let's take a look over here at the past history. So it's going to tell you, like for instance, we had a trade on October 28th, and we closed out we closed out today on the Aussie CAD. Now it closed out multiple positions. You can see right here we held multiple positions. Here it is right here. These are the multiple positions that closed out in today. This is the first trade that is closed out for the month of October. And it shows you right here, sorry, for the month of November. And it shows you right here that we closed out with, if you add it all up, it's going to be a net positive of 20 pips. In fact, take a look over here. Look at the month so far. This is this month's profit. This month's profit is 19.8 pips. So basically, we've closed out with our 20 pip profit based on these trades right here. Okay, now, so what you're going to do is you're going to get a signal. And let's say the signal is a sell signal, all right? The sell signal. So what you're going to do is when you get the sell signal, you're going to go to the SmartTrader.com, and you're going to go ahead and open up SmartTrader.com, and you're going to place your trade using the matrix tool. And the matrix tool is used by simply going ahead and right-clicking on the chart. And if you go down here below, you'll see it says the add matrix. All right, add matrix. Now, when I go ahead and add matrix, it's going to be giving me the options of what I need to do. So I'm going to go to New Zealand CAD. I'm going to use stealth mode. I'm going to go ahead and enter, let's say, 10 positions. All right. I'm going to go ahead and work out my equity management. Now, let me explain to you what equity management is. All right, because I'm going to go through the steps slowly. A trading account of $1,000. All right. All right. I sound like the Mr. Evil, right? $1,000. Okay. In this case, you probably say $1 million. But in any case, if you have an account of $1,000, okay, $1,000, then what you're going to do is you are going to trade. If you want to be conservative with your trading account and you want to be able to trade all the signals that come through, then every $1,000 that you have, you can trade one micro lot. One micro lot. That is a 0.01 lot size. There it is there. So that's the lot size per 1,000. Okay. So per 1,000, write that down. I want you to write this down because I think it's important that you write these things down. All right. So if you've got a trading account of $1,000, you're trading with one micro lot. Okay. Now, if I go ahead and let's say I've got a trading account of $400 and you go, oh, hold on, big dog. I've got a trading account of $400. How would I trade that? Well, if you're trading with one micro lot and you're trading all the positions that we trade 5 currency pairs. So that means that each currency pair needs an allocation of about $200. So if you've got $400, all right, not two, $400. If you got $400, then that means that you can only select 2 currency pairs to trade, right? Very important, because if you trade 5, you might be over leveraged, all right? So keep that in mind. I want to remind everyone again, if you got $400, that means you might have to only trade 2 currency pairs to sustain good equity management, all right? Now, if you say to me, well, big dog, you know what, I like to be aggressive and I've got extra money. If I need to have it, I can always go ahead and add more money to it. No problem. Then trade with let's say 1 microlot on all 5 currencies, all right, with $400. That's fine. But as long as you got extra money to put in, if you don't have extra money and you've only got $400, you want to keep that. You want to stay alive in this market. You want to stay in business. And so therefore, using good equity management in the start to build up your account is always a good way to start your business. All right. We're going to call this a business because that's what it is, right? This is a business. And we're going to treat it that way by using good equity management at all times. Okay. So this is the deal. So you got $1,000. Let's just use hypothetically. You got $1,000. And from $1,000, you can trade the 5 currency pairs that we're going to go ahead and send you signals on. And what you're going to do is you're going to trade with 1 microlot on each of these positions. All right. Each entry point on each currency pair is going to be 1 microlot. Okay. So I've gone ahead and put it in here. 1 microlot. Now I'm going to go ahead and say distance between each level is 25. Now, hold on a second. Let's talk about this now as well, because I know I've heard some conversation around, big dog, I've seen your signals and your signals don't always come in at 25 pips. Sometimes it's 40 pips in between. Sometimes it's 20 pips in or 21 pips in between. So there is this inconsistency of when these orders come through. Well, let me explain to you something that I think it's important for everyone to know. We are trading the market, the Forex market right now. And unfortunately, we don't control which levels we get in, not all the time, because these are the things that you have to consider. The reason why these trade alerts come through and they are inconsistent, some are 20 pips apart, some are 25 pips apart, some are 40 pips apart, is because of 3 reasons. And I want you to write this down because traders, this is important that you understand this. The 3 reasons why there is inconsistency is because you have to understand this. Firstly, number 1, if there's a news announcement, what happens when there's a news announcement? Firstly, number 1, the brokers increase their spread, right? There's an increase in spread. Also, price jumps, and the brokers will only fill you at the next available price. So if the market jumps from one price to the next available price, that difference could be 20 pips. It could be a 20 pip difference, or it could be a 15 pip difference. So if you try enter at 25 pip increments and a news announcement comes up and the market jumps 15 pips and it goes through where you wanted to enter, you could perhaps enter 40 pips away from the next entry point. But let me give you some good news. That's okay, right? That's actually a good thing because that's called positive slippage. And positive slippage means that basically what's happening is you are trying to, and let me go ahead and see if I can pull up one of my little tools here so I can explain it better. And there it is there. Okay, so this is the deal. When you're trying to get in, let's say on a sell. So I'm trying to sell the market right here, okay? Now, the market goes in and goes further up. and I'm trying to get in on a 25 pip increment. I'm trying to get in back again here on 25 pips right here. I'm trying to sell again. But what happens is the market jumps 15 pips. And now I only get to sell up here. That is, instead of 25 pips away from the first entry point, now I'm 40 pips away from the first entry point. What's just happened right now is the broker has slipped me positive slippage, which means I've got in 15 pips higher on a sell, and that's beautiful. That means I'm getting in at a much better price. You don't mind that, all right? You don't have to complain about that. That's a good thing, all right? It's a good thing. So remember this. If you see the trade signals come through, and it's not at a 25 pip increment, but it's at a 30 or a 40 pip increment, all right? Or at least for that particular entry. That's a good thing. And the reason why is because there may be some news out there that's given us a better price, that the market's jumped, or perhaps what's happened is the spread's got a little bit wider. And we may even get in, let's say, instead of 40 pips, maybe we could only get in by the time we entered 20 pips away from the last entry. But that's still okay. We got in on the trade. It would be better for us to be slipped and get in 40 pips higher, but it is what it is. We always try. We try getting in with increments of 25 pips. But because the way the markets move and because the way the brokers fill our orders, we may have we have to deal with slippage, positive slippage, or we may even deal with spread widening, especially during the Tokyo session. The spreads are a lot wider during the Tokyo session, especially if you look at like New Zealand CAD or Aussie CAD. They would give you wider spreads because it's normally during the European session, okay? So you may see inconsistency on your entries on that. Now, there is a third thing that may be an issue as well that traders need to be aware of, and that is your internet connection. When you're entering, let's say you're using the matrix tool to enter, right? And you go ahead and you place a trade with the matrix tool. Once you place the trade, there could be a 2-second, even a 3-second delay. By the time you send the order to the broker, because of the latency on your internet connection, by the time the order comes back, you may have been slipped a few pips because of the latency. So just keep that in mind, that you're going to deal with 3 things when you're trading, right? You're going to deal with slippage, whether it's positive or negative slippage. You're going to deal with your latency of your internet, all right? Some don't have it, some do. And then you're also going to deal with, of course, fundamentals, right? Fundamentals that create widening of spread. It could also be the time of your trading session, like the European session is going to be fine, but the Asian session, you might have wider spreads on an Asian session trading opportunity. So just keep that in mind, that when you see the trade signals come through the ByDzyne app, and you do see the inconsistency of levels that has been entered, it's only because of those 3 things, all right? If it was a perfect world, and it's not, we all know that, right? If it was a perfect world, we'd probably get filled 25 pips apart. But because it's not a perfect world, expect to see a little bit of inconsistency in the entries. Even though we try and enter 25 pips apart from each other, we may not always get that. All right? Now keep that in mind. Okay. All right, good. I'm glad I cleared that out. And if there's any more questions, I'm happy to go ahead and address those questions as well. But those are the things that you need to know. Now, the next thing, of course, what we're going to do is when we get that sell signal from the ByDzyne app, we want to go ahead and place our pending orders above or below the market. Now, if we sell in, we want to place our pending orders above the market, right? So we're going to use the matrix and place our orders above the market. We're going to change it above the market, not below the market, right? Now, we're going to go ahead and enter at market, and we're going to change this to sell because we clearly want to go ahead and sell. We want to go ahead and make sure that we add in this to take us out of the market with a 20 pip profit, right? 20 pip profit. Then we're going to go ahead and simply submit the order. Now, you're probably saying, well, Big Dog, what about stops? What about stops on this thing? Come on. Well, traders, if you're trading with one micro lot with $1,000, so every $1,000 that you have in your trading account, you're trading with one micro lot, and you trade the currency pairs that we're giving you, the 5 currency pairs that we are talking about: Aussie, Canadian, New Zealand, Canadian, Euro, US dollar, Swiss, Canadian, Swiss, and then lastly, US dollar, Canadian. If you trade those 5, the reason why I've chosen these 5, and let me hear the drum roll. Let me hear the drum roll. Come on. The reason why we chose those 5 currency pairs is because they will at times be hedging against each other. Sometimes you'll see that you get good trades coming off the New Zealand and the Aussie CAD, but then you're going to be stuck in the Euro, or at least the US dollar Canadian. But that's because it's hedging against each other. So when we're winning from one, we are maybe in drawdowns on the other. And then it's going to change. And then you might start seeing the one starting profiting and another one that was profiting starting to go into drawdown. And so it's constantly moving with each other, but it's hedging each other. And so what we're constantly doing is and you'll see, if you haven't noticed the trades, notice all the trades are coming through, right? You constantly seeing every single day profits being generated. But there might be one currency pair that you might be stuck in a few positions, but you'll see the other one starting to pay out. Very seldom will you see all of them loaded up and waiting for trades to go ahead and pay out, because they are working in sync with each other, okay? And that's the reason why we've chosen these 5. And so we don't use stop losses. Now, if you say, well, Big Dog, I use a stop loss, I like a stop loss, then that's up to you. But this strategy that we apply, we don't use stop losses because of the way we have gone ahead and strategically put this thing together. And it's taken me time to figure this out, but I've used this and I've got the results to show you that in the last 10 months, I've been trading it this way, I've been doing it this way, and it's been working perfectly fine. The one thing that is absolutely important for everyone to note, if you want to survive in this market, if you want to survive these drawdowns, do not over leverage your positions, because if you do that, if you go ahead and you trade with 3 standard lots or 5 standard lots with $1,000 trading account, you're going to run into problems. You're not going to be able to, first, you're not going to be able to sustain the drawdowns. And also, you're not going to be able to trade with all the entries that we require you to trade in order to be consistent with the strategy. So you have to trade each order in order to be consistent. Okay, you have to do that. Now, let me go ahead and fire this trade off right here. All right, there it is. I've gone ahead and fired it in. Now, I'm in. Now, very importantly, when you've gone ahead and put the matrix tool in, you'll see here that it's loaded. It's in on the trade. It's going to, if I go ahead and click on it right here, you can see I'm going to enter on 10 positions if I have to. I'm going to go ahead and put in orders 25 pips apart from each other. But I'm looking for a 20 pip net profit right here. All right. A 20 pip net profit. Another thing that is so important for you to understand, and I'm sure a lot of you have had these concerns, right? And this is this. It doesn't matter if you are on vacation and you suddenly wake up in the morning and you go ahead and open up your ByDzyne app and you notice that there is a signal that came through. But you don't know if that signal is the first entry, the second entry, the fourth entry, or the fifth entry. You don't know which entry it is. Let me just make you feel confident about something, or at least let me reassure you. Let me reassure you that it doesn't matter. All right, it doesn't matter if it's the first entry, if it's the second entry, if it's the 10th entry, if it's the 100th entry. Hopefully we don't get down that road, but it doesn't matter which entry it is. You are still going to follow the rules the way it is, because whether it's the first entry point, now follow me right here, okay? If it's the first entry point, and let's say this is the first entry point right here, if you see what this trade is, and let's say the trade is at what is that number? Man, it's in red here. I can't see it. I've got to put my glasses on. 88.86. Yeah, I wear glasses sometimes. So 88.86. So the first entry point was at 88.86, right? Right here. Okay, 88, so 0.88. Now, if you enter, all right, based on the first signal, and the first signal says that it was at 88.86, as long as you're trading at the first signal, and remember, it's got to be at that signal or better. It can't be if the market's gone down 10 pips right here. All right. If it's already sold off 10 pips right here, you should not be entering that. Then you should stand aside. Okay. Stand aside, because think about this. If it's already moved 10 pips, then that means there's only 10 pips left. So if you enter 10 pips right here, you're not going to make your 20 pips before you get another signal telling you to get out of that trade, right? But this year, if you enter exactly where the signal is, you're going to make your 20 pips, right? So that's if you enter at the first entry point. But let's say you entered at the third entry point, right? Let's go 3 levels up, right? Let's say this market continues to rally, picks up entry number 2, right? So this is entry 1, this is entry 2, and then it continues to rally, and it picks up entry number 3. And you wake up in the morning and you're like, I just noticed that there's a signal to go ahead and sell the New Zealand CAD. What should I do? Because I don't know if it's the first entry, the second entry, the third entry. Traders, it doesn't matter, because you know what? In order for this trade, even though I've got 3 positions in here, in order for this to be successful, it's got to go all the way back down to the second entry point and a little bit past that. Now, remember, these entry points are 25 pips apart from each other, right? 25 pips apart from each other. So that means that from the third entry to the second entry, that's 25 pips. So if you're chasing after 20 pips, you're going to make money, right? Because we're looking at a net profit of 20 pips. So it doesn't matter if you got in on the third entry point. You're still going to make your 20 pip profit, right? So you don't have to worry. You see, sometimes we make things complicated, more complicated than what it is. This strategy is that simple, my friends. All you have to do is this. You have to go ahead and look for the signals of ByDzyne app. When the signal comes through, doesn't matter if it's the first, 5th, 10th, 20th, doesn't matter. If you get a signal that says sell, you sell at that price or better. All right. So if the price again is at 88.86, you want to get at the price or higher. You don't want to trade a little lower than that, specifically if it's saying sell. All right. You want to trade that price or higher. Now, if it's a buy price, then you want to trade at that price or lower. Okay, you don't want to trade higher, because then you're losing money, right? You're losing the pips that you should be gaining. So you get the ByDzyne app and you get your signal. You trade it on SmartTrader. You go to SmartTrader and you go ahead and use the matrix tool to place the trade. Now, if you say, well, Big Dog, I'm not on my computer, I just want to go ahead and do it on my phone, no problem. Do it on your phone if that's what you want to do. But what you do is you've got to be consistent. Remember, we've got to enter at 25 pip increments. And now I just explained to you that even though we're trying to enter at 25 pip increments, sometimes we could deal with market volatility, right? Where the spreads are widened, where we have a news report like the rate decision with the Canadian dollar. They raised the rates, they kept the rates unchanged, but they spoke about the Canadian dollar they spoke about the possibilities of the next hike for the Canadian dollar in the rate decision. And so we got a big bullish move in the Canadian dollar itself. And we had a big jump in the market. We had price jump. And so when that happens, you can expect a gap between different entry levels. All right. You can definitely expect a gap between different entry levels. But don't worry, that's a good thing, right? So if you ever see slippage, all right, but positive slippage, just know that that is perfectly fine. All right. That's actually good news. All right. So again, let's make sure we understand. We get in the ByDzyne app, we place in our trades on SmartTrader. If we get a positive slippage, we're going to be okay with it. If the market gives us some negative slippage, which means that we get in 20 pips instead of 25 pips apart from each other, it's also not a bad thing, all right? Because we still will close out with a net positive of 20 pips. Now, if you're ever unsure about what you need to do, your best option for you is to close out your trade and wait for the next signal, right? So let's say you enter the market and you're 15 pips in the profit, all right? And you get to a point where, you're not sure if you made the right decision. Take your profit, close out. It's always better to clean up your trades, take your profit, and wait for the next signal, all right? Now, you can also do the next step and go to your ByDzyne app, look at the last signal that was placed on that currency pair, and look and see, okay, if that was the last trade that was placed, and you did not get a signal to close out that trade, then you can continue to hold on to it. That's your security right there, right? So you don't have to hesitate. You can say, well, I'm not in that trade. I'm going to wait until I can see the confirmation. And until you get the confirmation, you're simply going to go ahead and say, I'm not going to do anything. I'm just going to wait for the signal. And as soon as the signal comes up and says, New Zealand CAD, close out with a positive of 20 pips, then you're going to go ahead and close out your position, all right? You're going to close out your trade, and then you look for the next signal, all right? Now, I'm hoping that this has cleared up a lot of questions that you may have had over the last while, because I'm sure there was questions. We haven't had a session for about a month. So I'm hoping that this certainly clears things up for you. And if you ever want to go ahead and confirm your trade, you can go to the MyFX book right here, and you can go to the history, and you can take a look at all the trades that were closed out. So if you're in a trade and you thought, well, maybe I should have closed out my position. Well, if you take a look over here, all these trades are going to be telling you what the open and close prices are right here. And so you can go ahead and take a quick look and see, okay, what trades did I have? Did it close out already? Go check it out. You can certainly go ahead and do that. Now, also, something that you need to know, all right? If you follow me on my YouTube channel, just search for the name FXBigDog. I do weekly sessions, actually daily sessions, on the Pip Grabber trading strategy, where I talk about this stuff. And you can certainly come in there, subscribe to the channel, ask me questions about the trade. If you're in on 3 trades, or you didn't get in, or you're looking to get in on a trade, I will answer those questions for you. I'm in those sessions 3 times a week. You can ask me questions in my YouTube channel. When I do these live sessions, you can ask me questions on that. Also, come to the trading room. I'm in the trading room on a Tuesday, well, actually on a Monday, Tuesday, and a Thursday. I'm in the trading room. Come into the trading room and ask me the questions in the trading room about the Pip Grabber trading strategy. And I will be happy to go ahead and accommodate and speak to you about the entry points, the stop loss, well, not stop losses, but entry points, our target. We'll talk about if we've got multiple positions. I'll make you feel comfortable about how we are with the trades, so that you can understand and feel comfortable that what you're doing and what you're seeing is actually happening. Also, inside the YouTube channel, I also go through some live trades based on the trade copier signals. All right. So all the trades that come through the ByDzyne app, I go ahead and talk about that, and I put in some manual trades in my live trading account as we go ahead and talk this through. In fact, I've got 100% success record so far in my manual trades that I do. So if you're struggling to be able to initiate and put the trades in, come and join me. You've got me through the trading room. Join me in the trading room. I'd love to see you guys there. Go ahead and let me know that you're there. I know we've got the Spanish session as well that takes place at the same time as the English session. Ask the questions, post the questions in there, and we'll have the team make sure that I get those questions so we go ahead and address it inside the trading room. And also join the Spanish. Oh, no, it's not Spanish, but join the YouTube channel. Subscribe to the YouTube channel. Anytime I go live, you will know about that. Okay. So you got all the stuff that you need in order to be successful. Traders, I want to wish you guys the best of luck in your trading. All right, best of luck in your trading. We're here to help you, and we're here to make positive traders out of everyone. So if there's anything I can do or the team can do, please make sure that you reach out. We'd love to hear from you guys, and we'd love to continue to service you guys and make better traders. All right, make you better traders. All right, with that being said, I'm going to go ahead and hand it back over to our team. And we'll see you next time.